You're listening to On Shifting Ground. I'm Ray Suarez. To lessen America's dependence on foreign oil, the Biden administration has issued a challenge to U.S. automakers to make more electric vehicles. And you may be seeing more of them cruising the streets of your neighborhood. But the truth is, much of the world will run on oil for the foreseeable future. And decisions made by oil producers affect almost everything, from gas prices to election results, and even the war in Ukraine. In early April, OPEC Plus, led by Saudi Arabia and Russia, made a surprise announcement. The alliance is cutting oil output by 1.2 million barrels a day starting in May. That's roughly the equivalent of taking 1% of daily production off the global market. It sounds small, but it's a move that could further complicate ties between the U.S. and the Gulf states. To help us understand these tensions, Jim Krane joins me now. He's the Wallace S. Wilson Fellow for Energy Studies at Rice University's Baker Institute for Public Policy in Houston, and the author of Energy Kingdoms: Oil and Political Survival in the Persian Gulf. Welcome to On Shifting Ground.
Oh, hey, thanks, Ray. It's great to be here.
Why is OPEC all of a sudden making cuts in production as the world sort of struggles to recover after the pandemic?
Well, OPEC has gotten to be an interesting group of oil-producing countries now. It's bigger than it was. OPEC expanded in 2016 and now includes Russia within the cartel. The Saudis, they've always been the de facto leader of OPEC, and they've kind of changed their tune within OPEC as of late. I mean, going back to the 1980s, the Saudis were always the voice of reason, the cooler heads, if you will, within OPEC, where, the so-called price hawk countries like Iran and Venezuela pushing for higher prices. The Saudis were always the voice of caution within OPEC, saying, look, we push prices too high for too long, and we'll have demand destruction. Folks will figure out ways to be more efficient with oil, and we'll lose market share for a longer period. So we're seeing a big change in that now. So since 2016, when OPEC expanded to this OPEC Plus configuration, they've been a lot more focused on higher prices. One of the reasons behind that is Saudi Arabia itself, its domestic needs. It's investing a lot in these giga projects, not getting a lot of foreign direct investment to help out with that spending. And so it needs extra capital, right? So if your gasoline price just went up after this recent cut, by say 10 cents a gallon, you might think of that as a tax to help Saudi Arabia fund these hugely ambitious projects. And the same with Russia, right? So Russia's now the other de facto leader within OPEC that's making the decisions. The Russians they've invaded Ukraine. They're having a tough time with that war, and they need extra cash to pursue that. So their interests and those of the Saudis are pretty congruent right now. And that's making it tough.
Is this latest cartel-wide announcement in addition to the ones announced earlier this year by Russia and Saudi Arabia together?
Well, so we had a big cut last year, so last October, in the run-up to the midterm elections here in the U.S. I'm sure you remember the outcry within the Biden administration that the Saudis were playing politics here in the U.S., trying to punish the Biden administration for what they perceived as some hostility towards Saudi Arabia. Oil prices were at $90 back then, and the Saudis pushed through a cut within OPEC, 2 million barrels a day cut, pushed prices up right before the election, and claimed at the time that it was not about politics, that they saw some signals of market weakness and they wanted to preempt any kind of a fall in the oil price. Well, if they wanted to be consistent with that behavior back then and demonstrate that they weren't cutting because of the election and trying to punish the Democrats and Joe Biden, oil prices had gone as low as $70 recently. They were up at about $80 when they made this cut last Sunday. But if they wanted to demonstrate consistent behavior, then they should cut. So I guess the main surprise about all this was in the timing. They did this outside of the normal framework of OPEC meetings.
So now that these cuts are sort of percolating through the system and their effects and trying to understand them is also percolating through the system, is there simply less oil sloshing around the world market? And if so, What does that mean for everyday consumers? Because it seems like once they open the taps again, the price doesn't necessarily fall the same way it rose.
It does mean that, yeah. I mean, there is less oil sloshing around the market, and it's a good way of putting it. I mean, a lot of economists liken the oil market to a bathtub with a lot of spigots pouring oil in and a lot of drains taking oil out. And, if those spigots don't really keep up with the drains and you start seeing the level in the bathtub coming down, the main reaction is through price, right? The price goes up, and that way the drains might start to take less oil out. So that's sort of what we're probably going to see here. We're seeing some prices going up. It also affects economic growth and it affects inflation. Oil price is a key driver of inflation because, oil is really the only transportation fuel we have. We only have a little bit of electricity around the margins for transport. So transport costs go up, inflation goes up, and people raise prices on everything across the board. So a lot of things could flow from this cut.
The Saudis have been more friendly with Iran. They've recently been chummy with China during an outreach from Xi Jinping. And as you already mentioned, much closer to Russia as well. Added together, taken together as a group of initiatives, what's the impact on U.S.-Saudi relations?
I think the U.S.-Saudi relations have been fraying a bit for some time. I mean, we've had a fairly comfortable relationship with the Saudis going all the way back to the 1930s. Chevron that discovered the big oil fields in eastern Saudi Arabia back in the late 30s. And we became kind of anti-communist allies in the 70s. And the Saudis and the U.S. were really in lockstep, strategic lockstep throughout the Cold War. So when the Cold War ended, the U.S.-Saudi relationship lost a bit of that strategic glue that held it together. And we started to drift apart a little bit, but the U.S. is still spending $100 billion a year on keeping troops and bases in that part of the world. Especially after the Gulf War, we really ramped up our presence in that region. We've got sort of tens of thousands of troops. 35,000 U.S. troops in that region, with the last number I saw. So we're still very close to Saudi Arabia, but we're seeing that relationship kind of deteriorating. We're now an oil competitor to Saudi Arabia. We're actually a bigger producer of oil than they are. So that's changed things. The advent of shale here in the U.S. and this huge ramp up in U.S. oil production, it's been great for the U.S. economy, but that's one of the factors that pushed Saudi Arabia and Russia and Saudi Arabia and China closer together, right? So China is now the main market for Saudi oil, and OPEC was losing its market power and needed another big producer on board, and they looked to Russia. A lot of this is kind of a secondary effect of the growth of shale, pushing Saudi and Russia together and reorienting Saudi Arabia and the other big oil exporters towards the big growth markets of Asia. So, there's a lot going on behind the scenes. But I think the U.S.-Saudi relationship is probably going to continue to fray. It would probably ebb and flow with different administrations. The Saudis now seem to have a preference for Republican administrations more than they used to. But we're seeing a lot of electric vehicles coming into the market now. And I think the more that American voters switch from internal combustion engine to electric vehicles, the less pressure there's going to be on the president to have to keep Saudi Arabia on side, right? The presidential popularity is negatively correlated with the oil price, right? When the oil price goes up, presidential popularity goes down. There's never really been that much the U.S. president can do about the oil price. The main thing that he could do was just to jawbone the Saudis and try to get them to raise production. But I think that is starting to fade and will over the coming years and decades as American voters are less directly dependent on Saudi Arabia and on gasoline prices. So as we see that, I think that's going to give the U.S. president a freer hand in foreign policy and a freer hand in dealing with oil-producing countries like Saudi Arabia.
I think it's important to help the audience understand why the boom in domestic production that you were talking about a short while ago hasn't insulated American consumers more effectively from what Mohammed bin Salman decides, from what Vladimir Putin decides, from the effects of an election in Nigeria. Why do these things press so heavily on American consumers if the United States energy market has been transformed by exploration and exploiting resources that used to be pretty hard to get your hands on?
Yeah, it's true. I mean, I think it's a big shock for a lot of folks here. You know, we became the number one producer. We're actually a small net exporter, right? We export a bit more petroleum products than we import now. But, we're still basically beholden to Saudi Arabia and OPEC for price, right? I mean, the price formation basically happens in the Persian Gulf region. That's where the big exporters are, and what they decide to put into ships and send to market, and what they decide to hold back in abeyance is really the deciding factor on price, right? So they've all got now a lot of their oil production capacity that they're holding off on. They've got 2, 3, maybe a little bit more than 3 million barrels a day of oil production capacity they could bring to market immediately. It's ready to go. They're just twisting some valves, and that would push prices way down. But they're not doing that for the reasons that we spoke of. So I think it must be frustrating for Americans to be the number one producer, but still be really beholden to geopolitics and to decisions made and events that happen halfway around the world.
I just want to be clear on this because I think it's been a fundamental misunderstanding over the last year plus that if you were paying $5 a gallon, the president of the United States had fairly limited effect or limited tools at his disposal to affect that outcome. If a barrel of oil came out of the ground in West Texas, if a big balloon full of natural gas came out of a pad in eastern Utah or in North Dakota, its price was set in a worldwide marketplace rather than affected by the fact that an American was drilling for those resources, right?
Yeah, definitely true for oil. I mean, natural gas has hubs around the world, so it's less true. I mean, it's getting to be more true as natural gas is traded on ships now, and our price is starting to affect prices elsewhere. But with oil, yes, I mean, it's a global market. It's a single global market for oil. It's you squeeze the balloon in one place and it blows up somewhere else. So that has really always been the case. I think there were some misconceptions around shale. You know, a lot of folks, thinkers in the foreign policy sphere, thought we were going to get a bit more of a freer hand in U.S. foreign policy, that we wouldn't have to be so deferential to oil-producing countries because we were producing our own oil, and that was somehow going to insulate us from these price shifts, and it really hasn't. I think there's been a little bit of looking back and saying, well, why didn't we get to how prices are formed?
All the members of OPEC are looking at a world where there are climate conferences and noodling about how to decarbonize economies and how to produce the energy that the world needs in a less carbon-intensive way. Why would any OPEC member choose to raise prices when that creates the pressure that you mentioned earlier to find new ways to do with less? Aren't we on the verge of actually cracking some of those codes and doing with less, producing more dollars of GDP, using fewer BTUs of energy?
Well, so we're not going to be using fewer BTUs of energy, right? So the population is still growing.
Carbon-intense energy.
Okay, yeah. So that's probably true. Yeah. So, I mean, we've got a short term and a long term, and they're not always congruent with each other. So in the short term, oil-producing countries, they need more cash. They need more cash for domestic projects and in some cases to transform their economies away from so much dependence on oil, right? They need to diversify their economies. Longer term, though, I mean, they want to keep oil in the mix and attractive, but they are battling against these technologies of sometimes cheaper technologies and government policy that favors those technologies that's looking to replace oil in the global energy mix. So it's a tough one. I mean, you could see them wanting to maximize prices now so they can get short-term revenues for their shorter-term needs. But, longer term, they've got these liabilities. They've got huge reserves of oil underground. I mean, in the case of Saudi Arabia and some of the big producers, they've got 50 or in some cases even 100 years of reserves at current rates of production. So they want to turn that underground resource into an above ground wealth or infrastructure. And so they want to extend the age of oil as long as they can. So to do that, you don't antagonize people with super high prices and drive them into electric vehicles or more efficient technologies. So, there's some tensions against the short term versus the long term, right? And I think you see them oscillating between those two priorities.
Well, we don't hear a lot about other members of OPEC. I mean, there's countries as obscure as Gabon that are members, and Ecuador, and many other places in the world that may have different interests. I mean, the Sultan of Brunei is sitting on an ocean of oil underneath his little tiny, tiny country as well. Are there different voices saying, well, hey there, Mohammed bin Salman, maybe this isn't the way to go? Or is their preeminence as a producer so dominant that they win the argument?
Yeah, so there's a diversity of views within OPEC, but it's generally Saudi Arabia that seems to get its way. It's got the largest amount of spare capacity that it can bring on when it needs to. And it does that by foregoing lots of revenues. So you wouldn't see a shareholder-owned company investing in a couple million barrels a day of oil production that it doesn't use, right? Saudi Arabia is willing to make sacrifices, to get the geopolitical benefits and the strategic heft that it commands. Other oil-producing countries are not really willing to make those kinds of sacrifices, and so they generally go along with Saudi Arabia. You do see some dissent. So the United Arab Emirates is a neighboring country that has tended to go along with Saudi Arabia over the years. Recently, they seem to be chafing under this sort of Saudi-Russian leadership. The UAE has got a much more diversified economy than Saudi Arabia does. They want to step up their monetization of their reserves. They want to get them to market sooner rather than later before they lose value. And so they've been investing a lot in raising oil production capacity. And this sort of new OPEC mantra of let's push for higher prices is really thwarting them from bringing a lot of production online that they've invested in. So they're pretty frustrated with it. There's other dissenting voices from time to time, but the Saudis are pretty effective leaders. I mean, I think they've demonstrated that they're willing to take a big financial hit in order to maintain discipline, and that's usually enough to keep folks in line.
Even talking about OPEC seems so retro. At the beginning of my career, I remember when the world would hold its breath when the next meeting would begin in Vienna, and there'd be stock shots of delegations walking into the conference rooms in Vienna in their flowing Persian Gulf robes, and the world economy would hold its breath waiting to see what the production forecast would be. And the American economy, which was dealt really significant body blows in the late 1970s by OPEC pricing decisions and production decisions. I mean, it was a big deal. And then it kind of stopped for a while. And now they're back.
It's true. I mean, when oil markets are tight, OPEC's geopolitical power, it goes way up. So we had a long oil bust period after the 70s, right? So in the mid 80s, the oil price crashed and it stayed low until the early 2000s, right? So nobody really cared about OPEC in that 20-year period. We sort of forgot about them and went back to being pretty inefficient with oil. We started driving SUVs and pickup trucks and basically kind of set ourselves up for being exposed to oil market risk in tighter oil markets again. So when prices crept up, lo and behold, Americans were back driving the world's most inefficient vehicles and the longest commutes to work. And so the president kind of has to go to bat for these American motorists that are exposed, again, to high oil prices and to OPEC price manipulation. So we're sort of back in that kind of resource nationalist mindset that OPEC seems to have rediscovered, similar to what we saw in the 70s. It seems to be back again. And again, I think there's going to be a push here in the U.S. and in other oil importing countries to get more efficient. And this time around, the difference between the 70s and now is that, well, there's actually substitutes for fossil fuels. So we've got pretty good alternate technologies, including electric vehicles and hybrid vehicles, et cetera. So there are things we can do to reduce our exposure this time around.
At the center of a lot of these stories about the new OPEC is Crown Prince Mohammed bin Salman. He's been effectively in charge of Saudi Arabia, the day-to-day decisions being made there, for about 6 years. That's time, I think, to have a pretty good idea of what he's about, what he wants, what his goals are, what his long-term intentions are. What should Americans know about the man who's often called by shorthand MBS?
Yeah, well, I think MBS is a lot more headstrong of a ruler than we're used to. I mean, we haven't seen somebody in Saudi Arabia sort of running the show there that has been so willing to confront this long-held relationship with the U.S. and take decisions that wouldn't be approved in the U.S. I mean, we're used to a more compliant, deferential Saudi Arabia, including the previous king, right before the current king, King Salman, and his crown prince MBS. We had King Abdullah, who was really conservative, consulted the U.S. very closely, didn't want to sort of carve out his own relationships, outside the U.S., even in the region. And now we're seeing a much more headstrong leadership in Saudi Arabia. We're seeing this Saudi first mantra that you hear now about oil policy and foreign policy. And we're seeing the U.S. and Saudi Arabia on opposite sides of lots of different issues. Some of that is due to MBS's willingness to do this. I mean, I think he sees himself in power probably for the next 50 years or so. And he's got this chance while his father is still king to push through some tough reforms that his father can help him deflect blame for. You can do that now before he becomes king. So some of that is willingness to get things ready to kind of prepare the ground for when he takes over as the actual king. But some of it is just a major philosophical difference in ruling style than what we're used to, and more forceful style of rule.
As fascinating as all these changes in Saudi Arabia are, we could talk about them all day. I don't want to let you go before we touch on the effect that Russia and the invasion on Ukraine has had on the cost of energy around the world. What lessons has the Ukraine war taught the rest of the world about getting its hands on enough energy to run its economies?
The Ukraine war is showing that if your energy source goes rogue on you and that you have limited short-term options that you can do. I mean, energy is such a huge system with so much infrastructure and there's so much human well-being that depends on it that it's really hard to change where you get it from on a short-run basis. So for Europe, just for their well-being of their economy and their public health and everything else, they need 24/7, 365 connections to these fossil fuel supply lines, that a lot of which was coming out of Russia. So I think that taught them that dependence on a single exporter, especially one that was demonstrating some risky behavior, is a negative. But even just depending on fossil fuels when there are alternatives is also politically risky. It's really supercharging the energy transition, a move towards renewables, which don't use any fuel. You don't need to have 24/7, 365 lines bringing fuel to a system that's running on wind or solar. You need lots of infrastructure. You need lots of big construction projects. You need to import components and raw materials. But once that infrastructure is built and plugged into the grid, there's no more supply chain needed to keep that up and running. So I think that is becoming attractive. And I think, at least in Europe, they're looking towards their natural gas-fired power plants more as a way to keep the grid running when the wind and sun is not available. So I think it's causing that sort of stuff. Energy security is now a much bigger factor again, like it was in the 70s. And people are looking to energy efficiency, to alternative technologies, to substitute fuels, substitute technologies, more homegrown energy, whether it's fossil fuels or wind or solar or nuclear or hydroelectric or whatever.
Until that transition you describe is complete, what's an American to do? There are people listening to this program who worry about the cost of heating their homes, cooling their homes, who worry about the cost of transportation in a country that, frankly, among its highly developed, wealthy peers, has the weakest alternative transportation offerings. not great investment in public transit, in rapid transit. What can Americans do, if anything, to protect themselves, or what should they be watching for as the world continues on this transition?
It's tough for an individual person to reduce your exposure to shifts in the oil price, right? I mean, oil is really the main transportation fuel we have. The main thing that you can do is, you have to have some cash for this, switch to a vehicle that doesn't use gasoline as fuel, right? That doesn't completely end your exposure to the oil price, because you're still going to be exposed to it through prices on goods and services, because even if we can push a lot of it out of personal transportation, your car, truck, or whatever you drive to work, you're not going to push it out of heavy duty transport, the trucking sector. You're not going to push it out of aviation for a long time, or shipping, right? So the ships on the open seas, all of those are going to be using oil for a long time. So unfortunately, we are going to be exposed, if not directly, at least indirectly, to changes in the oil price for decades to come.
Jim Krane is the author of Energy Kingdoms, Oil and Political Survival in the Persian Gulf. He's also the Wallace S. Wilson Fellow for Energy Studies at Rice University's Baker Institute for Public Policy. Thanks for joining us on Shifting Ground.
Hey, my pleasure. Thanks for having me, Ray.
You've been listening to On Shifting Ground, produced in partnership with KQED, with funding from listeners like you. Today's episode was produced by Elise Manukian, Sienna Barnes, and Andrew Stelzer, and special thanks to Maya Kegley. It was mixed and mastered by Matteo Schimpf. Additional production and engineering were provided by Rob Spate. KQED's Jim Bennett is our technical supervisor. Jared Sport is our executive producer. Philip Yun is CEO of World Affairs. Our music is from Blue Dot Sessions. I'm Ray Suarez. Thanks for listening.